Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on the screen the stocks that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, so let's take a look at the market because, gosh, the Elliott Wave pattern is really spot on. We've been talking about this potential ending diagonal. Perhaps it's going to be extended just a little bit, but if you're familiar with Elliott Wave rules, we've talked about this before. Every five-wave impulse pattern starts with a zigzag, and we've been talking about all these zigzags. Now, I'm taking some of them off because it was getting awfully crowded on the chart because there's zigzags in here, multiple zigzags with complex patterns. But there's the big zigzag, which has created the relabeling of the Elliott Wave pattern. Every impulse pattern starts with a zigzag, so then it relabels to 1, 2, 3. That's where we are, and now we're in this pullback. I mentioned numerous times. You've heard me say this over and over and over again. It's one of my hard, fast rules. No security in any time frame gets very far away from the 10-day moving average. Things can get overbought, oversold for short periods of time, but not for very long. It's exactly what happened here. We had the vertical move up following the election results, and now we've come back down. We're actually broken below the 10-day moving average now, so perhaps we're starting that wave 4 correction. And if we do complete this last 5-wave pattern, that could bring us up towards its 161.8% extension up here as far as the completion of the 5-wave pattern and the extension of the zigzag to the next level. And that could bring us to the point where maybe we see a more significant correction. But for now, it looks like we're just going through and recovering a bit of an overbought condition. We'll see if we can hold this lower trend line. It happens to coincide right with the 50-day moving average. So we'll see how that plays out. Now, one thing I wanted to look at here was a little bit longer time frames. Now that we're starting to think about next year, et cetera. So I'm going to take that pattern off. And let's move over here and look at the weekly chart of the S&P. We haven't done that in a while. There you can see that diagonal pattern still. And we're in a wave 3 on the weekly chart, which is quite interesting because when we move to the monthly, you're going to see something considerably different. But there's the move up, and look how well the weekly pattern is staying within that confines of some people call this a pennant. And I know that there's been some comments about triangles. I do view this as more of a pennant. To me, triangles are ascending, descending, or symmetrical. So I call this a pennant pattern, but we're right in this area. And now if we move to the monthly chart, you're going to be able to see something that could cause a little bit of concern here. In the fact that look where we are. We're in a wave 5 to the upside here. There's that diagonal. I move the arrow. Look where the wave 5 is, right at the 61.8% extension level. And the wave 4 was right at almost the 38.2% fib level. That would give you an expectation of 61.8. So are we saying on the longer term that maybe we're going to consolidate here for a while? Or perhaps a little bit more of a correction? We'll have to see. I mean, we need to see what the policies are going to be, the impact of the tariffs, et cetera. Lots of things to talk about there when we get to the bond market. But I also wanted to mention that we are going to be doing a platinum event on November 25th that we'd like to invite you to show up to. You can see what the EWO Trader Platinum service is, and we're going to be talking about our outlook for 2025. So it's going to be a great event. We'll be talking more about the longer-term views and what to expect with the new administration, what's going to happen in next year. So love to have you join us for that. All right, so let's get back over to the daily chart. Not much else to say on the S&P. It's just kind of going exactly the way we thought it would. Now the only question in my mind is, do we come all the way down here to the lower trend line, fill the gap from the election, and come down to the 50-day moving average? Again, that would still keep us within this pennant situation and the potential for an ending diagonal that maybe just got postponed a little bit is the way it seems to me at this point in time. All right, let's take a look at the VIX and see what the VIX is doing with this little bit of a pullback. And we have, as expected, a little bit of a bounce to the upside here following the election. We came all the way back down to 15. Looked like maybe we were going to sneak back down to that 12.5 level, which is where we were in the beginning of the summer, if you remember. But for today, back above 15. A little bit of volatility coming into the mix here. And as I said, there's a lot of questions. The administration coming in has an awful lot to deal with. They really do. So it's going to take some time to go through and put some of the fixes in. If we take a look at the dollar, this is what's worrying me here. Is the fact that the dollar is screaming to the upside. You can kind of understand why. If there is the potential for more inflation coming in, and you see that movement up, and maybe a little bit of a global concern as far as we're getting other countries that are saying they're going to start selling oil in dollars, that we're using other currencies, et cetera. So there's been some underlying fundamental movements globally to put another bid under the dollar, but we don't want this dollar to get too strong. Of course, we don't, it doesn't seem like it was that long ago. I was worried about us losing the dollar. We didn't want that either. So I kind of wanted this trading range here. If you remember, I would like to have seen it stay between 100 and 105 and go sideways through there. To me, that was ideal. But if we go too high here, then we start creating issues for international companies with exchange rates, et cetera. So we don't want that dollar to get too far out of hand to the upside either. But here's part of the problem: the bond market. We take a look at the bond market. We've been talking about the bond market so often, especially in TradeFinder. We talk about TradeFinder each and every week. And by the way, if you haven't joined us for TradeFinder, you can see the link on your screen now. We do it every Tuesday at 1 p.m. Eastern Times during market hours. We look at the market, we look for trade ideas, and we have a live Q&A. We have a great community. Some of you have made comments that you love the community. You guys interact on your own, ask questions of me when we're on. It's a great event, and we love all the stocks that y'all come up with to look at, et cetera. So please join us for TradeFinder. Sign up for that if you haven't already, and love to see you on Tuesday. All right, so let's go back to the bond market. And the bond market is still not playing well. And with where we are in rates, we did have some economic news that ties into this that I wanted to highlight real quick. We had the wholesale prices that came out pretty much in line, 0.2, not too much of a surprise there, but it's the year over year. If we move to the annual inflation rate at 2.6, that's the one that's staying sticky. So the year over year is staying just a bit elevated. No, the Fed wants it down to 2%, and we're over 2.5%. So that's where there's some concern. In addition to the fact that if Trump does follow through with the tariffs that he's talking about, there's concern about that importing inflation. And then former Fed Governor Meister said that the bond market has it right. Remember, we've been saying, does the bond market have it right? Some of you have been making comments, no, the equities market has it right. They're not in agreement. We can all agree with that. They're telling us different things, but she said the bond market has it right. Interest rates are likely going to stay elevated, especially now. How far in advance are forecasting this Trump win? That's the thing that I'm wondering about, because I've been saying this, that it just doesn't make sense that prices are staying down on the TLT. And then moving up in rates. And if we are going to import inflation through tariffs, and I'm not saying it's a bad thing to do, I just think that it's going to take some time to work through. We're going to have some pain, some probably economic weakness to go along with it, even if it's the exact right thing to do economically. This is a tough fix that the administration is going to have to deal with. But she's saying that, yeah, that's the problem. And then we may not get, there's already been Fed governors saying we may not get as many rate cuts as you expected. We'll see that when we get to the metals as well. So we're hanging down here around that 100% extension. Beautiful zigzag pattern here on the TLT. Called it just spot on. That Elliott Wave pattern's disqualified, so we don't look at that because that wave 4 is too far. So we're down here. The only question now is, do we hold this 100% extension, or do we go further? Now, remember, with a 38.2% B-wave correction, you're only looking for a 61.8% extension. So the extended level is 100%. So we've already gone to one extension here on the TLT. Do we go further, or do we finally hold here and start to bounce a little bit? I think maybe we're going to kind of hang around in this area until we get the new administration in and find out, because there's some speculation that maybe Trump won't put quite as high a tariffs as he was saying on the campaign trail and may back off a little bit. So I think the bond market at this point in time is going to go through a little bit of a wait and see and figure out where things go from there. Let's take a look at some of our other markets. The DIA, these charts are all going to look pretty similar, as you can imagine, with the the Trump bump, they called it, with the move following the election. And then we're coming back down once again, back below the 10-day moving average. Again, no security in any time frame gets too far away from the 10-day moving average. You can get overbought, oversold for short term, but it doesn't last long. That's what happens. That's a rule that everybody should have in their toolbox. And so we're right back down here to the 10-day moving average on the DIA. I think it's interesting. I wonder if we'll see a little bit of a rotation, because there was a rotation into the Dow. You notice that this is a wave 5. I want you to remember that, because when we start looking at all these other markets, it's the only one with the wave 5. The rest are all wave 3s, and they will agree at some point in time. So you wonder if the DIA will change back. But there was a rotation into the Dow, but it seems to have run out of steam, and it hasn't relabeled to a 3 yet. Here are the Qs coming back down. This makes a lot more sense to me. Remember, I said I'd be surprised if the zigzag made it, but it did. Elliott Wave was smarter than me. The zigzag pattern said we were going there. I couldn't see it with rates going up, but it did anyway. But now we're coming back down, and so kind of getting a little bit of reprieve here as we move back down well below the 10-day moving average. And with elevated rates, you would think that one would be performing a little bit worse. Same thing with the IWM. We're getting the same scenario there. Also, see, all of these are in wave 3s except for the DIA. And then coming back down, I made the comment, I believe, last week, the U.S. market update, that I thought this one would lead the move back down because that 225 level was resistance for so long. If we are going to move into a new range, we have to have a test of that. When you have resistance that long, it needs to be tested to see if it becomes support. And so I did think we would lead it down, but the Qs are right on the heels of the IWM. Pulling back. So we'll see if we can hold this 225. Does it act as support? And then we bounce from here. So all this stuff, we're just correcting overbought conditions that occurred following the completion of the election. So let's go in and look at the metals. Y'all made very nice comments about having Brandon on. And if you liked that segment, I invite you to go over to the Hub Financial channel here on YouTube, register there. We do a crypto show each and every week with Brandon. I thought you would enjoy seeing him here. And if you want more of that, sign up over at the Hub Financial channel, and you'll be notified every time we have one of our broadcasts there, because he has been spot on. He nailed this. So broke above 80,000, actually got to 90,000, came back down. So he's been extremely accurate. So if you're a Bitcoin fan, that's where you want to come. All right, so holding in there really well. I've been impressed with how Bitcoin has consolidated this big move to the upside. Ethereum hanging in there around the 3,000 level, which has been pretty impressive. Remember how long we were trying to get above 2,750? We couldn't do it. We finally did. Got above 3,000, ran up to 3,500, pulling back once again, back to the 10-day moving average. Common theme. You're going to see that all over the place because things got overextended after the election. And then with Solana that we've been at it in, same thing here. So far, the cryptos have been holding their election move to the upside. If Trump follows through with what he said, cryptos, the crypto people are excited that they have a administration that's pro-crypto. And it seems like after some consolidation, we may be going higher in the crypto world. We'll have to wait and see how that plays out. Now, as we move to GLD, as we move to gold, that's where another concern along the bond market on this inflationary front. I did expect to see a bit of a pullback in GLD and the metals with the Trump win and the concern about the tariffs and creating inflation, et cetera. We got a little bit more of a move to the downside than I thought. I actually thought that we would hold in here around the 50-day moving average, more around the 240 level, but we're coming down here to 235. We do have some support there going back to the summertime. So we'll see if gold can get a little bit of a bounce. We seem to be a bit oversold now on both gold and silver, but I don't know how big of a bounce we're going to get. Wave 5 is less than 100%. That's a concern. If that wave 5 is done and the algorithm has labeled it purple, it thinks it's finished, that means that we could be coming all the way back down to the previous 4. That's a big move down in gold. Could we go back to 210? That would certainly show some elevated concern about inflation. The Fed stopping cutting rates. The expectation is they will go in December. We'll see if they do. One more 25 basis point, and I think they're on hold at that point in time. We'll see how that plays out. We look at silver. SLV. You can see same thing here. Now, another indication of a potential, at least short-term bounce here is look where we are. We're at the wave 4, right at the 61.8% level. So perhaps we get a little bit of a bounce. Can we complete this wave 5 in silver? Maybe silver starts to take a little bit of a lead back from GLD. You know, they've been flip-flopping over the last couple of years, but with technology, and if we are going to have growth in the economy, in the technology growth, perhaps SLV retakes the lead, and maybe that one can perform better than GLD. So if you're looking at one of the two metals, perhaps SLV is where you give the lean rather than gold GLD at this point in time. Let's take a look at oil. My goodness, I have no idea what's going to happen with oil. You know, the whole drill, baby, drill with the Trump administration wanting to go back to domestic production. So you would think that if we increase the production level from a domestic standpoint, that would push the price down. But will OPEC then offset that by having production cuts of their own? They're so concerned, as we've mentioned numerous times, on keeping the price elevated. So we'll have to see. That's where I think the economy comes in. Yes, if we're going to have more domestic production, you would think that supply demand, having extra supply will push the price down, but OPEC can offset that by cutting their own production. So it's going to be really interesting to see what happens with oil. We still have this big triangle here. Something's going to happen. We're going to break one way or the other. We'll have to wait and see which way that goes. But that's looking like a pretty interesting potential strangle there on a longer term basis on oil and getting into next year. Don't usually put them on that far out, but this one I think warrants taking a little bit of a longer term look. All right, now let's take a look at some stocks of interest. And we'll start with Netflix. You know the big news about Netflix. They're going to be live streaming the Tyson fight, and we'll see how that Tyson Paul fight. See how that plays out. I just hope it's a legit fight and not just a farce. And I hope for Netflix that it is as well. Disney also had good streaming numbers, and I've been a fan of Netflix here because I do think if we are going to have a little bit of economic pain here, at least in the short term, the streaming seems to make sense again as the economy maybe cools off just a bit. And so we're a little bit overbought, coming back down just a bit. You know, anything could change with the amount of people that sign up just to watch the fight, et cetera. It's going to be interesting to see how that plays out. But the streaming business is doing well. Nice wave 3. Again, a little bit overbought. Maybe we pull back just a little bit, but good looking chart there. And as a reminder, while I'm going through these stocks of interest, I'm going to look at Airbnb. Y'all ask about that. And as a quick reminder, each and every month this year, we're giving away one of our free level 3 subscriptions. That includes our time strategy, which is a sideways-based strategy. Looks to derive income on range-bound stocks. It's AI-based, gives us a likelihood that it's going to stay in the range. We can use calendar spreads, butterflies, etc. Then our volatility strategy, which is for the triangle breakouts, like I just showed you on USO. So that's going to be, I think, a really good strategy at the beginning of this year because there's going to be some unknowns on what's going to happen. And then our AI-based impulse strategy, which are directional-based strategy, which has been absolutely on fire lately on directional moves, and that's basically zigzags within the wave 3s. So we're giving away one of those free every month, and all you have to do to register is leave a comment underneath this video, and that puts you in. You can go to the website and see it's worth thousands of dollars. So just leave a comment, and you're registered, and good luck to you. And by the way, please hit that subscribe button. We want to go to this push to get 50,000. I love the community here. I don't mind it when y'all disagree with me. It's not just for me to blow my own horn here. I want to create an interactive community of people that are sharing ideas. That's what I want this to be. So share that with other people, and let's grow this and collectively have conversations and differing ideas. That's what makes markets, and that's what makes it so interesting. So y'all ask about Airbnb. We're at a wave 4 here, right around the 50% level. If it can hold here, then perhaps we can advance up to that wave 5. It's a pretty good level to hold. You can see there's some support there in addition to being a good wave 4 level there at a 50% correction. We're right there at the 50-day moving average. The only negative here is we need to get back above the 10-day moving average. So I would watch this really closely, but if you're looking to go long, I would want to see it close back above that 10-day moving average with follow through. And if it does that, then perhaps the wave 5 is underway, because that 4 can still come down to 61.8, but 50% may hold. We'll see what happens there. Of course, we got to talk about NVIDIA. NVIDIA with their earnings on the horizon. One of you asked a question about, moving into the Dow. Is that the kiss of death? And, historically, it has been for momentum stocks. It doesn't mean the stock is done going higher. It usually means that the momentum phase is over. And why is that? It's because so many institutions have to own it, and so much of it is bought. It takes some of the demand away. They've all bought it. Anything that has to match the Dow buys it, and it just takes the momentum aspect away. It doesn't necessarily mean that that the stock is over. It's not going to be necessarily an SMCI thing. They got their own issues to worry about. But you can see here that we're holding right above this area of resistance. We've got a nice zigzag breakout here. We went sideways right at the 150 level. We've backed off a little bit. All eyes will be on what happens on their earnings report. That's going to determine where things go with NVIDIA moving forward. That's clearly going to be the catalyst driving it. And then last but not least, we want to take a look at the INDA, because my goodness, did we nail this one once again. Just talked about this. We said that it would come down to 57, and if we didn't hold that, we go to 55, and if we couldn't hold that, we're going to 53. And look where we are, right down to 53. I said it should be a pretty quick move down to 53, and that's exactly what happened. So pretty spot on the INDA. We've been calling that. So now we take a look at it, and we're getting into an area where maybe we find some support. In addition, remember the wave 5 went more than 100%, so we are not looking for a retracement all the way back to the wave 4 here. We're just looking for a 61.8% retracement, which is exactly where we are, right in this area of that 53 level. So perhaps we do a little bit of a consolidation here on the INDA, and maybe we get ready for another run to the upside. So the INDA doing exactly what it's supposed to do, just as spot on as you could possibly be. Thanks as always for watching. Do appreciate your time. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.